Everyone's talking about the next financial reset, but few actually understand what it means, or how close it really is. They think it's just a conspiracy buzzword or another market scare. But beneath the noise, the numbers, the policies, and the technology are all pointing to one inevitable truth. The global financial system is being rebuilt, and XRP is sitting right in the middle of it. And here's the part that almost no one realizes. When this shift happens, it won't happen gradually. It'll happen instantly. Systems that took decades to build will upgrade overnight. That's why understanding this now and acting before the reset hits is one of the smartest moves any investor can make. Welcome back to Crypto Equation, where we go beyond speculation and decode the data, the strategy, and the timing that separate those who react from those who prepare. Let's be clear about one thing. The reset isn't about destroying money, it's about redefining it. Every few generations, the financial system rewrites its rules. We saw it when countries abandoned the gold standard, when the dollar became the global reserve, when digital banking replaced paper. Each shift created new winners, not because they were lucky, but because they recognized the pattern before it became obvious. Right now, that pattern is unfolding again. Central banks are rolling out digital currencies. The International Monetary Fund and the Bank for International Settlements are designing cross-border payment frameworks. Every major economy is aligning with ISO 2022, the universal standard for digital payments. And if you connect all those dots, one thing becomes clear. The world is preparing for instant, interoperable, borderless money. That's where XRP fits in, not as speculation, but as infrastructure. Most people think XRP is just another crypto token. They don't understand it's the bridge asset designed for this exact transition. While Bitcoin tries to replace banks and Ethereum powers decentralized apps, Ripple built XRP to connect the existing financial world to the digital one. It's the translator, the neutral bridge that allows value to move between currencies, banks, and blockchains in seconds. And here's where the math gets interesting. The global cross-border payment market handles around $150 trillion a year. If XRP captures even a tiny fraction of that, say just half of 1%, it would process billions in daily settlements. That level of utility would require massive liquidity. And liquidity is driven by ownership. So while most people chase hype coins and short-term profits, the smart money is quietly accumulating 3,000 XRP or more. Not for a quick flip, but for positioning. Because when the reset hits, owning XRP won't be about speculation. It'll be about access. Let's break this down. When a financial reset happens, old systems don't just crash, they transition. Paper became digital. Swift messages become ISO 2022 data packets. Now the next step is tokenization, the process of representing real-world assets on blockchain. Stocks, bonds, real estate, commodities, everything is moving toward tokenized value. The Boston Consulting Group estimates that tokenized assets will hit $16 trillion by 2030. Ripple is already building that bridge with the XRP ledger, which supports native tokenization and interoperability between central bank digital currencies. That's not theory. That's in development right now. Ripple has signed pilot programs with multiple central banks, including those in Europe, Asia, and the Middle East. They're working on private ledgers designed to issue digital currencies that can still interoperate with public networks like XRP. So when the reset goes live, when digital currencies become the norm, XRP's bridge role becomes unavoidable. And once that happens, owning 3,000 XRP won't just be smart, it'll be strategic. The most dangerous mistake retail investors make is thinking they'll have time. They assume there will be clear headlines, obvious signals, and plenty of warning before change hits. But that's not how resets work. They happen in silence, in test networks, in pilot programs, in regulatory frameworks written years in advance. By the time the world hears about it, it's already active. Look at history. When the US left the gold standard, the public didn't know until it was done. When credit cards replaced checks, it didn't happen with fanfare. It just became normal. When central banks flipped to digital settlement systems, it happened overnight. This reset will be no different. The question is, who will already be positioned when it does? Let's talk about what being positioned actually means. It doesn't mean going all in. It means owning enough XRP to benefit from the transition, not because of hype, but because of math. 3,000 XRP at today's prices is attainable for most investors. It's a calculated, disciplined position, a hedge against what's coming. And that's what makes it the smartest bet before the reset. Think about this. When liquidity shifts from the old system to the new, the first assets that facilitate that shift will experience a revaluation. not because of speculation, but because of necessity. If XRP becomes the default bridge for tokenized value, it doesn't need hype, it needs throughput. Utility creates demand. Demand meets limited supply, and that's how revaluations begin. What's unfolding right now looks a lot like what early investors saw with the internet in the 1990s. A handful of companies quietly built the infrastructure that would later power trillions in economic value. Back then, nobody cared about TCP/IP protocols or data routing. Today, those systems are invisible, but they run the world. Ripple is building the same kind of invisible infrastructure for money. And XRP is the lubricant that keeps that machine moving. The irony? Most investors are still treating it like a meme coin. They're looking for the next big pump while ignoring the asset designed to power the entire global value web. That's why 3,000 XRP is more than a number. It's a threshold of belief. It's the point where an average investor crosses from speculation into conviction. It's enough exposure to make the shift matter, but small enough to be realistic. It's the perfect position for someone who understands what's coming, but refuses to gamble blindly, because when the financial reset hits, and make no mistake, it's coming, the markets won't reward those who guessed. They'll reward those who understood. So what does a financial reset really look like? It's not the collapse of the dollar or the end of capitalism. It's the quiet modernization of the system underneath everything. The plumbing that moves trillions of dollars every single day. And just like every modernization before it, there will be two kinds of people. Those who adapt early, and those who realize too late that the rules have changed. The first time you use a digital wallet linked directly to your bank, you'll see it. The first time a company sends money internationally in seconds with zero friction, you'll feel it. And the first time institutions start holding XRP as operational liquidity instead of speculation, the entire market will understand it. That's the moment the reset becomes real, when the infrastructure changes quietly, but permanently. Now here's where the numbers come in. Global liquidity, the money that flows between countries, banks, and corporations, sits somewhere around $250 trillion when you include all financial assets. Even if XRP connects a small percentage of that value, it must support settlement for billions every day. To do that efficiently, XRP needs depth. Real-world liquidity pools that only form when enough tokens are held in circulation for use. That's the mechanism no one talks about. People ask, what will drive the price? The answer is function. Price follows utility because utility demands liquidity. And liquidity requires ownership. Every investor holding 3,000 XRP today is, in a small way, part of that coming liquidity base. When the reset channels value through the networks Ripple built, those holdings transform from speculative positions into functional pieces of global settlement. Dash dash. Most of the world still thinks crypto means speculation, memes, and volatility. But what's coming is infrastructure. When the old rails upgrade, blockchain won't look like an investment. It'll look like plumbing. It'll be the rails money travels on without anyone noticing. That's exactly what Ripple has been building for a decade. A compliant, scalable, enterprise-grade system that plugs into banks instead of fighting them. And while other projects chased headlines, Ripple focused on regulation, interoperability, and institutional trust. Look at their partnerships. Hundreds of financial institutions, from Asia to Europe to the Middle East, already test or use RippleNet and on-demand liquidity. That adoption isn't a theory, it's an audit trail. Those corridors move real money, measured in millions every day, and the numbers keep growing quarter after quarter. That's the math that most investors ignore, because it isn't dramatic enough for Twitter. Dash. Here's what the data shows. Ripple's on-demand liquidity volume has grown more than 400% year over year. Remittance companies are saving up to 60% on settlement costs. Average transaction time, 3 seconds. Average cost, less than 1 cent. Every metric points to scalability and efficiency. That's not a startup experiment anymore. That's a system proving itself in production. When regulators finally finalize frameworks for digital assets, institutions won't need to shop around. The technology they need is already live, tested, and compliant. At that point, liquidity flows where it's treated best, through the path of least resistance. That path is already paved with XRP. So why does 3,000 XRP make sense right now? Because it's an achievable position before institutional liquidity dwarfs retail. Because it represents conviction at the stage when conviction is cheap. And because the real risk isn't owning too much. It's owning none at all when the system resets. Think of it like owning shares in the internet's protocols back in 1995. Nobody cared then. Everyone cares now. This time, the asset that moves value instead of information sits in plain sight. Dash dash. Let's talk psychology for a minute. Resets don't reward panic, they reward perspective. During transitions, markets swing between disbelief and mania, and both destroy capital. The investors who survive and thrive are the ones who hold through uncertainty because they understand the fundamentals. That's why education matters more than prediction. Once you understand what Ripple's solving, the day-to-day price stops mattering. You stop asking when and start focusing on why. And the why is simple. Global money movement must evolve, and XRP is one of the few assets already engineered for that evolution. Dash. The term reset sounds dramatic, but in reality, it's just technology catching up to necessity. The existing banking network can't handle the volume, speed, or transparency modern economies demand. That's why central banks are experimenting with CBDCs. That's why financial messaging is moving to ISO 2022. That's why asset tokenization is becoming mainstream. Every one of those developments leads back to interoperability, and XRP was designed for that single purpose. This isn't hype. It's the quiet alignment of global standards that all converge on the same solution: instant, programmable value transfer. When that becomes normal, XRP's role shifts from potential to infrastructure. If you've been paying attention, you've already noticed the signs. Ripple hiring in government relations teams worldwide. Banks like Santander, SBI, and Tranglo expanding their ODL corridors. Regulatory clarity improving month by month. Even the World Bank acknowledging the efficiency of digital liquidity networks. Each headline looks isolated, but together they form a pattern. And patterns are what serious investors watch. You don't need to believe in miracles, you just need to follow the math. Every adoption milestone tightens supply. Every new use case increases transactional demand. Every regulatory green light removes uncertainty. When you compound those three variables, you get inevitability. So how do you prepare for inevitability? You build your position while it's still boring. You learn instead of guessing. You accumulate quietly, not because you expect a miracle, but because you understand a trend that the majority won't see until it's obvious. 3000 XRP isn't about greed, it's about foresight. It's about recognizing that in every economic shift, wealth moves from those who react to those who anticipate. And anticipation is just another word for preparation. When the reset hits, you won't see fireworks. You'll see banks announcing faster settlements. You'll see cross-border fees drop overnight. You'll see digital currency wallets connecting directly to payment networks. And somewhere deep in the code running those transactions, you'll find XRP doing its job, quietly, efficiently, invisibly. That's when the world will realize what it overlooked. They'll say, how did this happen so fast? And the answer will be that it didn't. It was happening for years while everyone else was distracted. That's the moment your preparation pays off. If you take one thing from this video, let it be this. Resets aren't about endings, they're about beginnings. The world's financial engine is being rebuilt, and the bridge asset that connects the old to the new is already in place. Understanding that now gives you the advantage that 99% of investors will wish they had. So hold steady, study the data, and remember that being early never feels comfortable. It only looks obvious after the fact. This is Crypto Equation, bringing you the facts, the foresight, and the framework to stay ahead of the next financial era.